So Rimmon, as you guys know, they have flyers. If you haven't used them, just check them out. Check them out. See if it can help your business. You can brand these to yourself and to your company, and it gives you a reason to go and talk with real estate agents. I know right now we've got these great rates, and I understand that refinances are through the roof, but as Frank likes to say, it's not always going to be that way. And it's your behavior and your actions today that are going to help your career tomorrow when these refis disappear. So check out the Rimmon flyers. Your company, all you have to do is sign up with these guys. They're free. There's no strings attached. Check them out. Right over there. Speaking of great rates, Brexit. Yeah, so we got great rates and a 21% boost in loan applications. Oh, by the way, that's all refinances, just as we said a moment ago. And along with the summer housing, that's going to affect the market as well. And that's good. But understand that it is helped along the way by Brexit.
And of course, Brexit means the dollar goes farther, not only in Great Britain, but really all markets, because global instability has foreign capital flooding the US market. So enjoy your summer trip to anywhere.
First one's here.
And this is all great and all. Sure, my family's going to have a great time in Shanghai this year. I get it. But there's one more thing that you haven't thought about yet. Really, you haven't thought about this. Buying castles. Yeah, did you know that because of Brexit and a strong dollar and a weak British pound, that buying a British castle has never been so affordable? So let's take a look at this, guys. What would you rather buy in these two markets?
So this property, simply known as the Tower of Lethendy in Perthshire, Scotland. It boasts 8 bedrooms, 7 bathrooms on 39 acres. This little piece of history was built in 1570 and later had an addition put on it in the beautiful Scottish baronial style. It boasts award-winning stonework, has been modernized to fit the needs of a 21st century family. It also comes with an outdoor heated pool, 2 tennis courts, and what's described as your very own challenging 18-hole golf course. Now, what's this little gem gonna run you? A very reasonable $6.1 million US. Or you can have
this little beauty in Palo Alto, California, located at 1061 Alma Street. It boasts 4 bedrooms and 2 bathrooms, has lovely out-of-control landscaping, beautiful telephone wires overhead, an unsightly satellite dish, a beautiful carport, your very own tow-away zone sign, gorgeous cemented side yard, and of course rear entrance. And this little beauty could be yours for a very reasonable and similar $5.5 million US, or according to the Zillow mortgage payment estimate, $19,345 per month.
It's a toss-up, isn't it? A beautiful 16th century castle in Scotland with your own golf course, or a dumpy track home in Palo Alto, California. Well, you know what I also noticed on that Zillow ad that we saw? Where's the APR? I mean, what type of loan? How much down? I mean, they came up with a payment. What's the rate? Anyway, did you see any of that stuff on the estimate? Oh well, we're getting sidetracked. By the way, this is no joke. Both those homes are for sale at those prices with those amenities today, right now. I'm thinking I'll take the castle. Thanks, Brexit.
According to the Mortgage Bankers Association, credit availability decreased over the month, driven primarily by a decrease in availability of conventional conforming loan offerings.
Not jumbo, not arms, not all day, but conventional conforming loans. It's like, hey, credit availability is down because that loan that everyone uses, yeah, there's less of that. Less of the other stuff too, but it's down because we're not offering the financing everybody wants and uses. I tell ya, that's gotta hurt.
I'm telling you, Frank, we have to look at the relationship between cause and effect. Cause and effect. Finance, like so many other areas in everything, reacts to its surroundings. If you blast me with a cattle prod, for instance, I'm going to jump. Then I'm probably going to collapse, but that's beside the point. Banks are not offering less financing because they want their earnings reports to look like crap. No, quite the contrary. Banks are offering fewer loans because they fear exposure to lawsuits. Think I'm wrong?
Just yesterday, DS News came out with an article in Counsel's Corner titled, "Look Out for manufactured RESPA lawsuits. To manufacture is to make something where it didn't exist before. So to manufacture a lawsuit is to make one up. Now you could say these lawsuits have no merit, but there's a lot of people in a lot of these banks that affect credit availability that would disagree. And as a result, the effect, we get less money to borrow at a time when half the industry and all the country is on pins and needles that something's gonna go terribly wrong, and one effect would be another recession. So the last thing we need is the cause and effect relationship between manufactured lawsuits and a lack of money to borrow.
You know, I gotta say, it does feel a little trivial doing shows right now in light of all the craziness that's going on in our country.
I know.
One thing I did see that I thought was pretty cool is there's a group of loan officers that are giving pizzas out to different police precincts around the country, and it's kind of gathered some steam. I did an interview with a couple of guys. Timely, I couldn't get it out in time. I think we're probably going to end up circling back around about this, but if you are one of those loan officers involved with reaching out to the police departments in our community, I think that's fantastic because, boy, at a time right now, I think we need those guys.
Makes you want to buy that castle and run away to England or Scotland, doesn't it?
It certainly does.
It does. You guys have a great day. Let us know your thoughts on today's show. Share down below. Forward and subscribe for free in your upper right-hand corner. If you're meeting us for the first time, we'll catch you guys later here at the National Real Estate Post.
Bye.